there, everybody. This is Craig at Max Trading, and it is a pleasure to welcome you to our real-time trading session today. Very nice to have you in the room, and we're looking for today's U.S. jobs report to provide some nice price action for us. Of course, we never really know what numbers we'll see in the news release. We have some ideas, but we don't know for sure, and we don't know how the market will react to the news. But Max charts are ready to take advantage of whatever the market provides for us today. We'd like the opportunity to show you how Max trading methods can take advantage of movement in the markets whenever it comes. And very importantly, perhaps more importantly, how our risk management protects the account balance. Would you please remember for me that this is not a trading room. We are not providing trade calls today. Nothing you see or hear in this webinar is to be taken as entry or exit recommendations. Everything, all of it, everything you see and hear is for educational purposes only. Eusebio is here again to lead us into the charts for this NFP session. Some of you, I know, have not yet had an opportunity to meet Eusebio. We're glad you're here, and I think you will soon discover that Eusebio is a highly skilled trader. You'll also quickly realize that he truly enjoys helping traders, and he's a fine teacher, so I hope you'll be able to listen and to watch carefully throughout our session today. And please do feel free to ask questions. You can use the question panel on your GoToWebinar window. We'll be delighted to help you with any questions that you may have. The methods that you will see on the charts today are those taught in the Max courses, which begin next week. Or you can choose to study anytime by using our videos. For those such as yourself who take time to attend our webinars or to watch the video playback of our webinars, we do provide very nice discounts for you, and I'll post those links for you during our session today. Eusebio, I believe we're ready to get started, so thank you for sharing your time with us today for this NFP session, and I'll pass the microphone along to you.
Yeah, thank you very much, Craig. So welcome to everyone. So we are facing indeed in around 10 minutes now the non-farm payroll. The non-farm payroll is always complex news release to handle for several reasons, for mainly two reasons. First of all, it has to be combined with the unemployment rate, and both must be in agreement. This means that if we have a good positive surprise, a big surprise in the non-farm payroll, a good one, this means a number here way larger by 40 or 50 Ks larger than the forecast or more, then the unemployment rate must be smaller than the forecast. Or in the opposite way, if the non-farm payroll has a very negative number, so a bad surprise with less than 40 or 50K or more than the forecast, then the unemployment rate must be larger than the forecast. In these two only cases, we have almost always, not always, but almost always a sustainable and directional movement we can trade after the news release. In all the other cases, when the deviations are small or when the two numbers are not in agreement, the market is way more unpredictable and becomes more difficult to trade, and for me it's a no trade situation. And so we will know if we will be in a trading situation or not. The second reason the non-farm payroll is complex is 2 minutes after the non-farm release, there is the revision of the previous month, which is not included in the Forex Factory calendar. But this revision can sometimes create also some perturbation in the market, and this is why when the two release I have just mentioned, the non-farm payroll and the unemployment rate, are in agreement with a good surprise, we don't always have sustainable and directional movement. So if we have the two numbers in agreement with a surprise, then I will show you how the max, in the case we have a nice movement, how the max handle such kind of situations. If we don't have a tradable situation, I will do what we call within the max force a trade, just to show you how our trade risk management approach helped with our max trade monitor, so helps to either bank a profit if the movement is still present, or limit the loss in the case that the price does not move or goes against the trade and we are forced to close the trade with a loss. So anyway, whatever the situation, we will have an opportunity to demonstrate some features of the max. And so we will not rush. Generally, when we have a big surprise in the numbers, we have a lot of volatility. We have to wait for the volatility to settle down before considering any opportunities, in the case it's a tradable situation, of course. And so we have to wait for 7 minutes now, and in the meantime, if you have any question, I will of course answer your question. I have several pairs I'm illustrating on my screens. First of all, we have the first 5 pairs here: the pound US dollar, the pound Kiwi, the pound Aussie, the pound yen, and the euro US dollar. These 5 pairs comes from our website. We have sometimes, so we can I can explain what we do here. First of all, for the calendar, what we do in our page, maxtradingsystem.com/newswatch, we describe what are the news which are really important along the week. And for example, for today, we have only the construction PMI on the pound this morning for the London session, and then the non-farm payroll this afternoon. I speak in terms of my time zone. Okay, I know it's the morning, for example, in USA, and the evening on the other side of the planet. So, but we describe only the news which are important. We mention them with the label major. When we have a label like monitor, it's simply indicating that this kind of news release may create some volatility, but it's not necessarily a dangerous news. We can stay in a trade through such a news. And when we have the mention H4+, this means that in the case of a surprise, the impact may also be present in higher time frames, 4 hours and higher. Based on this news, we provide also, in combination with our top 10 pairs we provide every week, which are the pair moving the best, making the nicest moves. We also provide for each day of the week a suggestion of pairs to specially monitors based on the news only. Now, of course, we know that the market is moved not only by the news release, but also by the geopolitical situations, and also by the monetary policies and the decision every day made by the central banks, for example. But based on the news only, here we have some suggestions day after day. And so for today, we have these 4 pairs I have just mentioned. So the pound US dollar, the pound Kiwi. When I monitor the pound Kiwi, I like to monitor also the pound Aussie, and then we have the pound yen and the euro US dollar. And so these information may be freely accessed through our web page. It's free. You just have to connect to the page, or you can subscribe also for free to be notified when the page is updated. So when I monitor the euro US dollar, I also like to monitor the euro yen, and then because the non-farm payroll concern the US dollar, of course, I have added here the US dollar yen and the US dollar CAD. In such a way, I have a small number of pairs to monitor, and I don't care for the other pairs. If we look for the 4 pair mentioned, the pound US dollar, the pound Kiwi, the pound yen, the euro US dollar, we see that the pound US dollar has nicely moved today, 76 pips, the pound Aussie 115 pips, the pound Kiwi 123 pips, and the pound yen 74 pips. I think, we have still 3 minutes. So I will quickly describe what we have on our screen, on our chart. We have the price movement with some of the indicators we are using, like moving averages, like Bollinger Bands, the STO RSI here, and our bias directional indicator. So we have two lines on that directional bias indicator. We have a short-term or fast bias, and we have a long-term in red and green. So a fast bias, slow bias, or long-term bias. And so the idea is that indicator tell us in which direction we have to trade. We have also some level, you can see here on this example, several white lines, but we may have also other lines which represent what we call max price levels, where the price may possibly react. If we observe what has happened, for example, this morning, we can see that, and during the ASEAN session, that max price level, which is defined on the previous weekend. I prepare them every Saturday or Sunday before the weekend. So this line has been defined 1 week ago, and we can see how today during the ASEAN session and the first portion of the European session until the London Open, the price has used that level as an important resistance level. And so these levels may be also accessible, so Craig will give you some information about these levels if you want. Peter is asking, does the bias indicator works well in the strategy tester? Yes, it works well in the strategy tester, with the exception that we have to make a small change in one parameter. But it works well for practice, not necessarily to identify the best turning points in a trend, but just for practicing. And as I have said, provided we make a small change in the settings of the parameters. So if we look now on the calendar, we are almost on the moment of the non-farm payroll. Let's update the calendar. We have the green button, so this means that the news is ready to be released in around 1 minute now. I will reduce the screen here to better see what is happening on the pairs. That way. Okay. Usually before a news release, such an important news release, we may have some speculative movement and some volatility developing 5 to 15 minutes before the news release itself. And then what we see in the case of a surprise is a movement in 3 steps. First of all, a quick spike in the case of a surprise, a quick spike in the direction of the news, then a retracement, and then again in the direction of the news, the fundamental movement, which can then be traded in the conditions I have explained. So a few seconds. We see the market which begin to be agitated. So the news is being released, and we have anyway to wait a minimum of 2 minutes for the revision. So no reason to worry and to hurry. So 200 Ks for the non-farm payroll. The deviation is only 19 Ks. So a small deviation. It is not a big surprise, but it is positive, but not a big surprise. Now we have to wait for the unemployment rate. And normally, because we don't have a big surprise, the spike should not be very large, in fact. But we never know. When we have some generalities, this doesn't mean that the market always reacts the same way. 4.1% like last month, so not an improvement. So we don't have conditions for a tradable situation. So this is not a tradable situation. So unfortunately, we cannot expect a sustainable and directional movement after the non-farm payroll. Anyway, what I can do is, whatever the movement the price will do after the volatility will settle down, I will show you some features in the case we force a trade, how our trade risk management approach with the help of a tool we call the Max Trade Monitor can give us a very detailed situation on how the trade is evolving and how we can manage the trade consequently. So, but we have to wait somewhat. In a few seconds we will have the revision. I have no idea what the revision may be, but let's measure the spike on the pound US dollar. Here we have, you see, 34 pips. On the pound QE it should be a little larger because more volatile, 93 pips. It's not unusual with such a volatile pair. 39 pips on the pound Aussie, 31 pips on the yen, only 31 pips on the yen, on the euro US dollar. So we have here 27 pips, so not a big volatility. 37 pips on the USD yen and around 37 pips on the USD CAD. So just a little bit patience. In the meantime, I will answer a question asked by someone in our Max chat room. So the question is, have you seen the proposals that the European Union through ESMA, European Securities and Market Authority, 30-to-1 leverage cap for major currency pairs, for non-major currency pairs, major equity indices and gold, a cap of 20-to-1, minor equity indices and other commodities, a cap of 10-to-1, and so on. So a strict limitation of the leverages in trading. This is a proposal. This is not yet accepted. I don't know if it will be accepted or not. With the Max, it is not necessarily a problem, because when we consider opening a trade, I will show you that with a trade manager, we always use a very small risk per trade. Personally, I use between 0.5% and 1%, in some circumstances even less than 0.5%, and we never advise to use more than 2% for the trade risk, 2% of the trading account. When we use a maximum of 2% risk per trade, the true leverage of the trade, of one trade, does not exceed 8-to-1. So with an 8-to-1 or less true leverage, we are well under the maximum leverage these proposals are suggesting. However, this limits the number of scale-ins we can make along a trend. It limits the number of scale-ins in a severe way, but we don't need to make many scale-ins to make nice results. With just 1, 2, or 3 scale-ins, we can make nice results, provided we get, of course, a good movement, a nice movement. And we have a nice movement on every pair on average 2 or 3 times per week when we trade with a small time frame like the 5-minute time frame, the 15-minute time frame, even the 30-minute time frame. So there is not exactly a problem. And someone has answered or has complimented his comment by telling that we have to be very cautious about margin calls. Now, this is not exactly the case. The margin calls concerns when we are in a losing situation. And when the free equity, so when you open a trade, a margin is deducted from your free equity. And so when your free equity drops below a certain limit, you have a margin call, and the margin call requires for you to increase your free equity either by closing some positions or by refunding quickly your account, by transferring money from another account you have with the same broker, for example. And if you don't do that and the free equity continue to drop because you are in a losing situations, then when your free margin reaches the call-out level, for example 30%, then the broker closes automatically your trade at his discretion, possibly all the trades. Now, when you are in profit, on the contrary, when you are in profit and you have used all your available margin, You don't have a margin call. If you want to open a new trade, or if you want to open a scale-in, if you want to add to another trade, you will get an error message telling you that the trade cannot be opened because you have not enough money in your account. But this is not a margin call, okay? And so there is no danger if you are profitable and you try to open a new scale-in and you have exceeded your margin. You will not have a margin call. You will have simply an error, not enough money. And the trade will not be opened, of course. So let's see what's happening. So the price continues to move in the direction of the new, but not by a great amount of movement. But we have to wait. We have to wait. We never ever open a trade after long bars. So we have long bars on all the pairs. By the way, this is for me an opportunity to explain that when we have a news like the non-farm payroll, and when there is an impact, some impact, small impact, medium impact, or big impact due to the nature of the news release, the impact is present in almost, if not all, the pairs. And that's easy to understand, in fact. The news release concerns the US dollar. And so the big boys who move the market do not trade pairs. They trade currencies. They buy, for example, the US dollar against other currencies, different currencies. It may be partially against the pound, it may be partially against the euro, it may be partially against the yen. And so this is why you have many pairs which will be impacted by such a news release. Don't forget that the US dollar is one of the most traded currency with the euro. And so when big trades are made on the US dollar, this impacts several other currencies necessarily by an effect of volume. Now let me explain a little more what we have on our chart. Let's take a pair like, for example, where is a pair where we have the beginning of retracement, or we can take any one. I'm going to use the USD yen, for example, just to illustrate something else. You see, we have other price levels. The price has almost reached this price level before reversing. So what we have on our chart is these two lines forming a small channel. They are called the ETF line. One is in yellow, the other is in orange. And the small white arrows show when these two lines cross. A down arrow when they cross downwards, an up arrow when they cross upward. This gives us the direction of movement within a trend. And the trend is given by this directional bias indicator. And globally, just to make it simple, when the long-term bias here, or the slow bias, is red, we consider only short trades, and when it is green, we consider only long trades. And so the change in color when the bar is closed initiates the trend reversal. Sometimes, depending on specific circumstances we teach in our courses, we can anticipate, we can preempt a trend reversal before the slow bias changes its color. But once we have a pinpointed trend reversal, this does not mean that we have to open a trade. We then have to wait for a valid entry setup to go in the direction of the new direction, so of the new trend. And then when we get that entry setup, we have to wait for the price to reach our entry level. So we have to wait for the trend reversal, then we have to wait for the setup bar, the entry setup bar, which can be coincident, by the way, with the trend reversal, but not necessarily. And then we need to see the price reaching our entry price level we define with a specific procedure we have. And then, of course, we place a stop loss, and then we handle the trade once the trade is opened. For the exits, we use a lot of exit techniques. We have several categories of exit techniques. Let me show you on another chart. There are exit techniques used or defined with indicators like the STO-RSI indicator here. For example, typical exit setups are when the STO-RSI is making a divergence with the price. There are other exit setups, of course. There are also exit setups made with the price itself, the price action itself, when we have some types of configuration the price is forming. Then we have some exit technique based on the structure the price is forming in its trend. And then we have exit techniques with what we call the movement invalidation. At some point we can decide when the movement the price is unfolding makes no longer sense for the trend we are holding. And then a last category of trade is when we have a news release or what we call a critical time period. It is a timing aspect in the trade when we are facing some specific timing aspect during the day. So this is considered as an exit technique. For example, should we be in a trade in the pound Aussie, for example, before the non-farm payroll, a very strict rule we have is 15 to 30 minutes before the news release, we close the trade. We do not want to stay in the trade when the news is released because we never know the direction the price will take after the news release. Look here, we had a downtrend. So this means that in that portion of the price movement, we look only for short trade. And then we have the news release indicated with that red vertical line. It was a non-farm payroll a few minutes ago. And the price has reversed quickly. And so even if you have a rather tight stop loss, you never know how far the price is moving, and you never know exactly where your stop loss will be executed. It will not necessarily be executed where you have your stop loss on the chart. You may have a gap, or you may have a wide spread. And typically in a short trade, your stop loss is executed on an ask price, and so with the spread widening, the ask price can be very high. And so we do not want to be caught in such a situation. This is why we close the trade 15 to 30 minutes before the news release. Another situation is if we have an entry setup appearing before a news release, in the last hour before the news release, we don't open the new trade because we are left only with 30 minutes to 45 minutes. This does not give us enough time for the price to develop in an interesting trade. So when the entry setup is too close to the news release, we simply skip that opportunity and we wait for another one. So now we are seeing on some pairs the pound Q is some retracement, the pound Aussie is some retracement, the pound yen some retracement. So let's see if we will have some good opportunity after these pullbacks. We have also the retracement in the US dollar yen, in the US dollar CAD, but not yet an important one, in the euro yen, of course. But I repeat, the numbers were not such that we had a trade opportunity. So what I propose to illustrate is our trade risk management approach. But we have to wait for that for a valid technical entry setup. When we have a trade opportunity, the trade is always validated under three types of conditions. The first type is the technical aspect. Is the setup technically valid? We have criteria telling us when the trade is a valid one. The second aspect is the risk aspect. Is the risk appropriate for the trade? For example, the stop loss must be large enough, depending on the volatility, depending on the pair, depending on the time frame. And the third types of conditions is the global context. Is the trade in agreement with the global context? For example, should we have an excellent, strong number in the non-farm payroll for the US dollar, which has not been the case, it would make no sense to short the US dollar. Okay? Well, let's have a look to the here, which pair can we take? We can consider the pound Aussie when the candle will close, or the pound yen, or the euro US dollar. But I explained it will be forcing the trade, because there are several reasons why these trades are not interesting. We are not in the context of good numbers, and then these long bars make the trade technically not valid. But I want to illustrate something else, so here. But we have to wait for the bar to close, so we have 3 minutes. Maybe on another pair we see the pullback begins to be interesting in the pound Kiwi. The pound yen also, it's interesting. Hello Marvin, welcome. The USD yen presents an interesting situation. If the price breaks that price levels, we may have some interesting situation, despite the fact that we have a long bar here. But in real conditions, I would not take such a trade for the reason I have explained. But we see that the trend has reversed from red to green for our slow bias. And so I can use it perhaps to illustrate if the price closes above that max price levels. The chart is not very nice for the pound yen. Not very nice for the pound Kiwi. The smoothness of a chart is important too when you consider taking a trade. This means that there is an ordered trend, a well-ordered trend handled by the big boys. They know what they are, where they are pushing the price. None of these pairs are nice enough. I take the time to choose the pair, so there is no reason to hurry. The US dollar is strengthening. We can see that on the pound US dollar going downward. The pullback cannot be deep enough. The euro US dollar is going down, the US dollar yen up, and the US dollar CAD up. I will consider the US dollar yen here. The US dollar yen is not in our top 10 pairs, so it's not the best moving one, but I can use it because the price seems to cross that max price levels. But we have to wait for the bar to close. We see by the nature of the candles that we still have some volatility in many of the pairs. In general, when we have some impact, so whatever the type of impact, medium impact or a big impact in the market, the effect of the impact lasts approximately 5 to 6 hours. So this means that we have time enough to consider any tradable situation. In the case of no surprise at all, in the case of no deviation, then there is no impact, of course. These long bars we are seeing in the pair like the euro-yen, the pound-yen, for example, presently, are always annoying bars. They prevent us to consider any trading situation. So we may have possibly an interesting situation developing in the pound Aussie. The trend has reversed the downside. We can see that the effect of the non-farm payroll has been completely erased, and the price seems to continue the movement it had before the news release. But we have to wait for the appropriate setup before considering here a short trade. The other possibility is, of course, the trend will reverse to the upside, in which case we will consider a long trade. So patience and disciplines. As long as the conditions are not appropriate, we do not trade. And we know that we can only count, just for the purpose of this demonstration today, to count only on the technical aspect. The global context is not with us, so this is not a trading situation, so a good trading situation, but good enough to illustrate the trade risk management approach we use with the MAX. The pound Kiwi is a bit in advance compared to the pound Aussie because the trend has already reversed. We can see that here. The trend is reversing, but we have to wait for a valid entry setup. And to have a valid entry setup, we need to have, first of all, a blue candle here, closing above these two lines. This is one of the conditions we want to see. So will the price move enough in the pound Kiwi, in the pound Aussie to give us an entry setup bar? Pound Aussie, it's a bit too early because we don't have the trend reversal yet. Except, let me check something, if we can preempt the trend reversal here. Yeah, this is the possibility. We can preempt, in this case, we are in a situation when we can preempt the trend reversal, so to the upside. So I'm expecting a long entry setup on the pound Aussie as well as in the pound Kiwi. The pullback are not enough in the pound US dollar, in the euro US dollar. We are only at 1 minute after the open of the present candle. It's a little too early to consider if these blue bars will be technical entry setups. In 4 minutes, many things may happen. Now, what sometimes happens, especially when we have such long bars and the price does not make a pullback deep enough, we may miss what seems to be a nice movement. One of the way we have to avoid or to catch these movements anyway is to use the uppermost level of the max, which is the max ETF sum, which goes deeper into the details of the price action, and then we can catch a portion, at least a portion of these movements. So 2 minutes before the close of the present candle, and most probably, at least on the pound Kiwi, this will be an entry setup bar, a technical entry setup bar. Okay, it's not valid for the global context, but I want to show you our max trade monitor. So I'm going to check if my option is good. One click trading. Okay. Okay, I'm going to set the trade, the max trade monitor on the pound Kiwi. I will use a 1% risk profit. I don't ask a confirmation dialog. I will not annotate the trades in order not to have the chart with too many annotations. So okay, we have two panel opening. Okay, now let me widen this one. We have a technical valid entry setup with this blue candle. Okay, and I will, sorry, the candle is not closed yet, so in 20 seconds. And so I will consider, first of all, to place my stop loss. Somewhere here, and then we have to wait for the close of the candle before considering an entry price level. So here my entry price level will be here, but the trade is not a valid trade, okay? The context is not appropriate, but I can show you technically how we handle the risk. I will explain in a moment the information contained in that panel. So when the price will hit that level, I will push on the button. Okay, now you see the trade is open at the ask price, so a number of pips above the level I have marked, because we have to take into account the spread, which is around 4 pips, 4 or 5 pips. So now the trade is opened. When the risk per trade has been defined in the max trade monitor and the stop loss has been placed on the chart, when we push on the button to open the trade, the max trade monitor calculates automatically the trade size using the position sizing concept. I can show you that in the terminal panel. In the trade panel here, you can see that the trade has been opened with 32 microlots for a trading account of 10,000 US dollar. This corresponds with the stop loss to a maximum risk of 1%. This means that should the price reverse and hit the initial stop loss, the loss will be maximum 1% plus possibly some slippage, of course, except if we have a gap at the moment the price drops. Now let me explain the information on our trade risk monitor panel. We have two panels, one panel for the buttons with mainly 3 buttons, buy or sell, MX, XXX. Whenever we open a trade, the trade is considered as made of 2 units. So the trade size is 32 microlots, as we have seen, so 1 unit is 16 microlots. And so when we will have an exit setup, we will close 1 unit, leaving 1 open unit if the price continue to move in the direction of the trade. And then, so this is the purpose of the MX button. MX close just 1 unit and means momentum exit or minor exit. The XXX is a final close. When we push on that button, whatever the number of units open on the trade, 1, 2 or more, if we make scale-ins, then the XXX button closes all the open units. So this is for the button panel. There are other buttons we don't use for the moment, and we have also parameters panel. And then we have the information panel here. I'll put it here. We have 2 columns. One column for the symbol, which is the pound kiwi, and one global column. The symbol column gives all the informations related to the trade on that pair, the pound kiwi, and the global column gives all the informations if we have several simultaneous open trades. And so for the moment, with only one open trade, the global columns is identical to the symbol column. Now, in each of these columns, we have two important informations. We have the line ESL result. The ESL is our emergency stop loss. We call the stop loss an emergency stop loss because we consider that the trading account must be protected whatever happens. And one problem which may happen is an interruption of the internet connection, for example. Our internet can go down. In such a case, we become blind, and we need to be protected if the price goes against us, and we don't have, for example, the possibility to call fast our broker to know what is happening and possibly close the trade. So at least this is our maximum risk for the trade. The second line is the x66 profits. And so you can see, for example, for the ESL result for the moment, the maximum loss, should the price hits the stop loss, would be minus 0.96%, just a little bit smaller than 1. Because whenever we calculate the trade size, of course, there was a round off in the size of the trade. And then you have the second information, which is the x66 profit. This represents the result of the trade. It may be positive or it may be negative. It represents the result of the trade if the trade is closed on the present price. For example, if we close the trade now, there would be a loss of minus 0.11%. And so these numbers evolve whenever the price evolves. Okay, these numbers, the ESL result, will evolve either when we make an MX or when we adjust the stop loss. And then we have, so these number in percentages, we have so other informations in percentages or in pips with the closed profits, with the open risk, and so on. And so we have a lot of information helping us to know at any moment what is the risk taken on the trade and how we can handle that risk while the trade is open. And so now that the trade is opened, I'm waiting for an exit setup bar. You see, when the conditions are not appropriate, the movements are way more difficult. Now the price seems to range in many pairs, to hesitate, to wait for something else. And this is the difficulties when the fundamentals are not present in the market. The movements are not clear, in fact. If this candle here, the present candle, closes as a red candle, it will be an exit setup bar, because our indicator here will trigger an exit setup bar. And then when we have an exit setup bar, so we have to consider to make an MX, I will explain the two possibilities we have when we have to consider making an MX. I like the Euro-Yen too. Let's see what the Euro-Yen is doing. This was an entry setup bar. This may be also an entry setup bar, so let's wait for the close of this candle. I will show you two simultaneous trades. Let me put the trade manager on the euro yen. I have presets so for that, and so I will not annotate the trade. Okay. The panels are on my second screen, so I will make them closer, and I'm going to adjust my stop loss here. So the stop loss size will be here around, it can be a bit smaller this way. Not too large, not too small, sorry. And then let's wait for the close of the bar. So I remember this is just to illustrate the trade risk management, okay? You see the global column here represent for the moment the trades on the pound Kiwi. There are small differences in the number here. I don't know why. Okay, let's see if we can have the entry here. Where must be the entry? Right here. And it would be a buy. Should the price be below the stop loss, the button turns to sell. You see, as soon as the price here reaches the ask level for the entry, the number becomes black or green. Okay, let's buy here. Now we have two open trades, okay? I have perhaps forgotten to reset the numbers before opening the trade. This is why we may have a small differences here between the two columns. But what I can do is I can hide one column. And for that, I go here in the configuration panel, and I don't need to show the global variables, showing only the symbol numbers. But I will do the contrary. I will show the global here and not there, because it seems for me that this column is the correct one. You can see a little less than 1% for each trade, so the total risk is 192%, a little less than 2%, so a very acceptable risk for the two trades. We can adjust the stop loss with the mouse. Let me show you here the effect on the ESL result, so the risk for the trade when we adjust the stop loss. If I tighten the stop loss, we have rules on the way to adjust the stop loss. In this case, I can adjust it a little bit, for example here, but not too much. So by just a few pips, and you will see that the risk here has decreased to minus 0.81%. And the aim of a max trader along the trade when he has taken or she has taken an appropriate trade is to progressively reduce that risk per trade. And once the risk has been cancelled or has become very, very tiny, then the trade puts the trader in a very comfortable situation. Then the trader can consider all the actions available, all the possibilities available to the trader to improve the result by making scale-ins, for example. We can dock also this panel to the chart in such a way that if we move the chart on the screen or on several screens, the panel will follow the screen. When I mark a chart, personally, I always mark the chart on the bid price because MetaTrader always shows the bid price, but when I measure my profit manually, when I don't use the MTM, of course I have to deduce the spread. But I like to know where I have defined in terms of the bid price where the trade has been opened or closed, by the way. And we like to draw vertical lines on entry and exit setup bar. For an entry bar, we use a green dashed line, and for an exit bar, we use a magenta line. An important aspect of these two numbers, the ESL result and the XXX profit, is when we have to consider to make a scale-in. A scale-in adds risk to a position, and we know the nature of the risk the scale-in adds to the position. And so knowing that risk and knowing these numbers, we know if the scale-ins may be potentially dangerous or not to the trade. And so if the scaling is acceptable, we make the scaling. If the scaling is not acceptable in terms of risk, we have the choice to skip the scaling. When I observe my charts, with the complete template we have with the max, I see that I can tighten somewhat my stop loss here, just below this small magenta line here, reducing further the risk on the trade. And for the pound kiwi, for the moment, it's not advisable to adjust the stop loss. So we have rules to adjust the stop loss. We have rules to make the entries. We have rules to make the scale-ins. We have rules to make the scale out, so the MX, and to adjust the stop loss. It's interesting to note for those of you who are maxers, who use the max, it's interesting to note that this high of this candle, for example, for the moment, has just stopped on a TT line. Okay? But we were not in a situation of TT rejection. The TT line goes approximately that way, approximately. Just to give you an idea what it's doing. If this candle closes as a red candle, it will be an exit setup bar again. And so I will explain the two possibilities we have relatively to the MX decision. Well, finally, this bar will not be an exit setup bar, so we will have to wait for the next candle, as well as in the Euro-Yen. Now, when you are in a situation when there are no reason for the price to move significantly, for example, you have forced a trade, as I'm illustrating here, should the price reach some profit level, then it's not necessarily a wrong idea to to take that profit and to close the trade, because when we are not sure that a good trend is unfolding because of the nature of the news release, then most of the time we know by experience that the trade will be closed with a loss, which will be always a small loss. But if temporarily we are in a positive, profitable situation and the profit is large enough, for example, let's say, for example, 0.5%, then it's not forbidden to bank that small profit. But this is not the aim of the max. The aim of the max is to catch trends, which happens, as I have said, in the small time frames, 5-minute to 30-minute time frame, on average 2-3 times per week and per pair. And when I say a trend, this means a movement of more than 50 or 60 pips, depending on the volatility of the pair. So we are again in a possibility of an exit setup bar in this case, but we have to wait for the bar to close. We always wait for the bar to close before considering exit setup bar. So for those who use the max standard, you see here that the price is again flirting with a TT line. can see the effect when the news releases are not clear enough. There is poor momentum, high volatility in the movement, and so this makes trading extremely difficult. We are not forced to trade during these difficult situations. So with the MAX, we can be extremely picking. This is why we are extremely attentive to check that any trade we take are in agreement with the three types of conditions I have mentioned. So the technical aspect, the risk aspect, and the global context aspect. If one of these contexts is not appropriate, we don't trade if we want to be extremely strict. But I would like to show you in the case we have to close one of the trade with a loss, that the loss will be extremely small, extremely manageable. A very important reality many traders ignores or forget is they consider that having the highest winning rate is a good point. In fact, it is a question of comfort. Okay, let me illustrate here the exit setup. So this candle is an exit setup bar. It has closed here with a top in the RSI. It is what we call an exit setup bar. Normally, we have to make an MX at this level. If the price follows through to this level, which is the case, we have to close the trade. We advise to the MAX member when we have such an exit setup to do the MX in such a way to minimize the loss should the price hit the stop loss. Okay, in such a way we minimize the loss. The loss will be less than 1%. In this case, because I've taken a risk of 1%. Personally, what I do, I use a second option we have, we call discretionary situations. Discretionary situations is a situation when we can somewhat violate a rule, especially an exit rule, but also an entry rule, provided the trade risk management aspect is in agreement. In this case, because I'm using a very small risk, 1% per trade, I'm authorized to use that discretionary situation. And that discretionary situation for me is I don't take my MX if it is a losing one. I prefer to close the trade on the stop loss, the 2 units if necessary, or if the trade is invalidated, but it will not be the case. We are forced to wait for the stop loss to be hit. So because the loss will be small. Why that decision? In fact, last year, after having closed several thousands of trades, 4,000 and a few more trades, I have made a deep statistical analysis of my trades. Before that analysis, when an exit setup was occurring, I was making my MX, and so my losses were always small in the case of a losing trade. We have around 20% losing trades. It depends on the circumstances, it depends how the market is moving. But I have also realized that should I use that discretionary situation, my losing trade would have produced losses a little larger, but globally my profitability would have been way better. And so this is why now I use that discretionary situations. Now what I wanted to mention again, a point many traders are ignoring or are forgetting is not because we have a high winning rate, which is very comfortable, that the losing stakes are small. Even with a 70 or 80% winning trade, we can still face losing streaks made of 4 to 10 losing trades in a row. 10 losing trades in a row, even with an 80% winning rate. And so the trade risk management and the money management, we make the distinction between both, helps to survive these losing streaks in such a way that if we experience such a losing streaks, the drawdown will be minimum. And a minimum drawdown is always easily recovered because, as you know, larger is the drawdown, way more important is the profit to recover. If you have a drawdown of 50%, this means if you have lost 50% of your account, you need on the remaining account to make a 100% profit. And the profit to recover increases exponentially with the drawdown. And so 4 to 10 losing trades in a row is not infrequent, even with a high winning rate. And what sometimes happens, this is not so frequent, but you may have a losing streak, let's say for example 6 losing trades in a row, 2 winning trade, possibly good profits or small profits, and then another losing streaks. And this is why being extremely strict in the way you choose your risk and in the way you handle your risk management is extremely important. This is why, personally, I always want to have these numbers under my eyes when I trade. I want to know exactly where I am when I'm trading. Okay, this is also an exit setup bar. My profit is not large enough. I am in the same situation, in the same discussionary situation than I was here. I will ignore that MX. One of the ways to close a trade before the price hits the stop loss is, as I have said, a movement invalidation. This may be the case for this pair, the euro-yen, or of course if the trends reverses to the downside. And the movement invalidation is made in that area between our MO line, this gold moving average is called the momentum line or the MO line, and this line, this small dotted magenta line, which is called our invalidation zone line. And the area for the movement invalidation is in that area between these two lines. There are reasons for that, which are explained during our different courses. Now, when you are engaged in such trades, as you can see, it can take time before the price moves either in your favor or against you to take a significant decision. And this is why trading requires patience, a lot of patience and discipline. And by experience, I consider that having these numbers helps me to stay patient and to stay disciplined. No need to rush in any decision. It's not because the price is retracing somewhat that I will panic and push on the panic button. The risk I have taken when I have opened the trade is a very, very acceptable risk. So there is no reason to panic if the price goes against me. I know I will have losing trades. And so I must accept that possibility. One trade alone never makes a trading system or never makes the quality, never defines the quality of a trader. It's only when you make a large sample of trades, 50, 100, better 200 trades, then you can, by analyzing your trades, see what is really your trading style. Now, because the time is flying, we will have to wrap up this session in around half an hour now. If this candle will not be an exit setup bar. The setup bar was this one. But I would like to show you perhaps the movement invalidation. I would like to show you the effect on the risk when we make an MX. I have shown the effect when we adjust the stop loss, but I would like to show the effect when we make an MX. Maybe we will have the movement invalidation here. The first step is to wait, if this happens, for this candle to close below our momentum line. As you can see also on the other pair, the different pairs are doing almost nothing. So this is the situation I was explaining when we don't have clear numbers in the non-farm payroll or in an important news release, we don't have clear movement. If this candle closes again as a red candle, we will have perhaps, not sure, perhaps not, an exit setup bar. We will see. Perhaps the movement invalidation setup here. Let's see. This happens very frequently. You see here the price has bounced off from our momentum line or here from our blue balance line. So this happens somewhere. This is why when the price is reaching these moving averages, I pay extremely attention, especially if the price breaks these lines, because this is when the movement invalidation will happen. No, this candle cannot be an exit setup bar. less than 1 minute for this candle. Okay, the price has just closed below the Mo line here, and so here I'm forced to close the trade if the price reaches this level here. I'm going to show you this level here. Yeah. So this candle now is what we call the setup bar for the movement invalidation, and if the price hit that level, which coincides with the IZ line, but it does not necessarily coincide, it may be, the level may be above. So if the price hit that level, the movement makes no longer sense for the trade, and I'm forced to close the trade. And you see the nature of the loss on that trade. So let's see if the price will hit that level, in which case I will make an XXX closing the two opened units. Okay, I close the trade. You see the trade has been invalidated, and you see the loss, just 0.5%, half of the risk. Okay, half of the initial risk, which was illustrated by the initial stop loss, which was somewhere here, perhaps. I don't remember exactly where it was. Yes, it was here. And what happens sometimes is what you see here, the trade has been closed and the price bounces off. But that's not a problem. If I have another entry set up, I will take another trade. So whenever we have a losing trade, and I have explained why that possibility was high, you see the loss is always a small loss, 1/2 R. So we are left with this one. And I would like to show you the impact on the ESL result if I have the possibility to make an MX, just to show you how that number will decrease importantly. We may have something developing in the pound US dollar and in the euro US dollar, but it's time, it's too late now for this session to illustrate what can be done. But as again I have explained, the conditions are not appropriate to take a trade. See, in the euro US dollar, something is developing as well as in the pound US dollar. Let's have a look on both. So with the MTM, it's very easy to handle the trade. So to open the trade, to close the trade, to adjust the stop loss. Okay, this candle is an entry setup bar, but it's not a good time to open the trade, okay? And so we can make the sell here. See, a little less than 1% on that trade and the risk, because this is what I have taken as the parameter for the trade. In this case, let me explain a little more in terms of the conditions for a valid trade. So technically, the setup is a good setup, okay? So technically, it's okay. The patterns of the setup is good, technically speaking. All the conditions, the technical conditions are good. The risk aspect is good in terms of percentage, but it's not good in terms of possibility to continue to go down. Why? Because we see due to this long bar, it will make difficult for this price movement to go further downwards. This is a big risk. So this conditions is not good. So I'm forcing the trader to illustrate so the MTM and the global context. The news has not produced, the two news have not produced a big surprise in agreement. So the global context is not in agreement. So this is not a good trade opportunity. Okay. Now, due to the nature of the volatility, the stop loss is a bit too small. It's a stop loss size of approximately 27 pips plus the spread to 2.5 pips, so 30 pips approximately. It's a bit too small due to that extreme volatility. Now, when we have in a small time frame, first of all, you can see that the price does not move so fast, but nonetheless, trading with a small time frame, especially when you have several open trades, this requires a lot of concentration, a lot of attention. And this makes the trading process even more difficult when, like in this example, you have one pair with a long trade and the other pair with a short trade. You can be confused very quickly in the decision to take when you observe the charts. If this candle closes as a red candle, it will be an exit setup. I will show you in that case the effect of making an MX on this risk, which stays as initially because I have not moved the stop loss and we are still with two open units. But this candle has to close as a red candle. And for sure, it will be an exit setup bar. But this does not mean that the exit will be executed. It depends of where I will set my price levels to execute the exits. Now, if you remember, I have closed the previous trade on another pair, and I have not used the reset button here, and so the global columns takes into account any previous closed trades. And so this means that whenever we open a new trade, the trading account or the balance which is taken into account to calculate the trade size is the initial balance. If we reset the numbers after each closed trade, we trigger the compounding effect, compounding or uncompounding effect. And so in particular, because this global column takes into account the previous trade, which has been closed with a loss of -0.5%, you can see we have 0.2 plus 0.8, so globally we have 0.3% to deduce to the 0.5% loss of the first trade, and you get the global result here should these two trades be closed now. So 30 seconds for this bar to close. Will we have an exit setup bar here? It will not be an exit setup bar with this indicator, but we may have possibly, it depends how this candle bar will close, an example of price action type exit setup bar. Yes, this is an exit setup bar for the max standard, and so I will make my MX here at where am I? On this level, if the price follow through. So we have an exit setup bar not due to an indicator but to the specific price patterns we are seeing on the chart. We have several types of patterns which we can use for our exit setup bar, and so this is an example of one of them. Okay, let's make the MX, and you can see that by closing one unit here, this has reduced by almost half the risk on that trade. And of course, because the entry price level for the exit is approximately the same as my initial entry. So now the risk has been halved here in this case. Now here in this case we may have an interesting situation. So the max standard, the standard maxers know what I mean here. I have explained in a previous example on the, I think it was the Euro Yen perhaps, I don't remember which pair it was. I have mentioned the TT line. Here we are also in such a situation. So our home base playing the role of a TT line. The price is really very volatile. There is no momentum, but the price is volatile. In fact, in the pound Kiwi, in the pound Aussie, the price is in reality in a choppy mode and stuck into a rather large consolidation zone area. So we will have to wrap up this session in around 10 minutes. Do you have any questions about all the explanations and the informations I have given today? It's several months now that the non-farm payroll does not give good trading situations. So this shows that the numbers on the employment and the unemployment are not coherent, and so this illustrates some potential problems in the real economy. So even if we know that the numbers released for the non-farm payroll are approximative, this is why there are several revisions along the months, but it gives a good indication. So the price seems to gain some momentum in the pound Q, but as long as it is stuck in all that concession zone area, there is poor chances, small chances that the price will break will go higher. It must break either to the upside that level here or somewhere this level here. Oh, Matthew asks, is the max also suitable for swing and long-term trade? Yeah, of course. And with higher time frames, it works even better. We have a lot of maxers trading with the 4-hour time frame, the daily time frame, but also intermediate time frame like the 8-hour time frame and the 12-hour time frames. And so they work really nice. And higher is the time frame, more comfortable it's to trade with the max, in fact, because we have more times to analyze the position. So personally, I trade 2 time frames independently. I trade the 5-minute time frame and I trade the daily time frame. I like the daily time frame, but it's a personal choice. Tony, I have illustrated, this is the 3rd trade I'm illustrating. So the first one was on the pound yen, on the euro yen, I think, which has been closed with minus 0.5% loss. And now we have these 2 ones. But I have explained that the conditions were not appropriate to take trades, okay? I don't trade with stocks. With the max, Matthew, we can trade stocks, of course, or indices. We have some maxers trading with another platform, which is, for example, TradeStation, and it's possible then to trade stocks. On MetaTrader, you have, depending on the broker, CFDs on stocks or CFDs on indices, and so it's possible to indeed trade these indices. If you have, if you use a futures broker, then you can trade also indices like the S&P 500, the Dow Jones, the Nasdaq, the DAX. The DAX works perfectly well because it's a very trending instrument. So, and within the max we have CFDs, and when I produce the max price levels every weekend, I include also around 20 pairs, but also the S&P 500, the Dow Jones, the Nasdaq, crude oil, gold, and also, because this has been asked many times, the Bitcoin. I don't trade personally the Bitcoin, but I include the levels for the Bitcoin. So I'm going to close this trade because we are approaching the end of this session. So, okay, this trade has been closed, you see, with a very small loss of minus 0.11%, but globally we are in profit thanks to this one, okay? I will close this trade here because we have to wrap up the session. So we don't have an exit situation, but I will close it. The price now has moved, is moving to the downside. We have a good momentum to the downside, so it has still some potential to move, but I will close here before we wrap up. And so you can see that when we have the appropriate numbers under our eyes to manage the trade, I have made with not appropriate conditions 3 trades. 2 have been losing trades. This one has a potential to be a winning trade. And globally, you can see, so almost 1% profit on this trade, but the trade was not complete yet. And globally, the 3 trades with only 1 winning trade, the global result was positive. Okay, and so this is the virtue of the trade risk management we have with the max. And when we have the appropriate conditions, it's really easy to make 0.5%, 1%, 2%, 3%, 5% of profit per day. And this is why we need to be extremely picky when we take the trade. We need to be patient until we have the very appropriate conditions to trade. So it's not a big profit, 0.18%, but let's show in the terminal. So if we look here, you see we have the profit here. Sorry, okay, no, the trade has been closed, and you see I have started with a balance of 10,000, and despite bad conditions, so I've succeeded to grow a little bit my account with a percentage corresponding to what we are seeing here. Okay? This shows that we have to make the efforts when we trade, when it is worthwhile to make the effort. So be prudent, be patient, be picky in your trading situation. Soon or later, there will be always good conditions. Okay? Any other questions before we wrap up? And I thank you very much for your participation today and for your patience, for your questions, and possibly your remark. Okay? So I wish you a great end of the day, and see you tomorrow for the presentation of our global approach with the MAX. Bye everyone, and take care.